To the wise, life is a problem. To the fool, a solution.
Huge moment. I think if you look at people's interest in the asset class, it's been very high. And look, I think a lot of people don't want to set up a crypto wallet. They don't want to, incur the extra risk of, managing that themselves. And so the Bitcoin ETF, I think, is a very big deal. I think the institutions that are participating, I've been involved in this industry for about 10 years, and, having BlackRock as one of the ETF providers, sponsors, what have you, is a big deal. Added credibility to the whole industry.
BlackRock is involved with the Bitcoin ETFs, but they're also involved with other projects as well. Ondo Finance has partnered with BlackRock for treasuries. They have a treasury account with BlackRock, so DeFi earners can earn a yield.
I'm not really sure what planet people are from that it's not enough, or they didn't think they thought it would be bigger. Certainly there was a lot of hype, and maybe it just underwhelmed compared to that, but that's a relative issue that I can't help that. I can only go with reality and past the numbers. And this was like top 0.1% ETF launch ever.
The Bitcoin ETF was one of the top launches. It broke records. It was one of the top launches ever in ETF history.
And I could also say that like new growth from RippleNet it's all going to be people who are using cryptocurrencies to settle or stable coins or some of these sort of blockchain technologies that we're not particularly looking to grow the sort of pure. So in the early days of RippleNet, you could use RippleNet to settle, and you could provide, Forex. You could provide a Forex rate. Let's say if you just want to use it for messaging, let's say you said, look, we don't want to use Swift for messaging, we want to use RippleNet for messaging, but we still want our internal Forex desk to provide all the rates. Or it's not even a foreign exchange application. It's all, US dollars, or it's all Mexican pesos or something. We brought on those kinds of as many websites to be on the internet as possible, even if they don't produce any, even if they don't fit any of Google's strategic direction, because somebody will use them, and that person is another target customer that, Google can offer their services to. The same kind of logic applied, but new growth is all going to, we're very focused right now on blockchain settlement. We're very focused right now on blockchain settlement.
You heard David Schwartz. 2024 is the year of blockchain settlement. They're not working on Xcurrent. They're not working on Interledger or Cinnamon or anything like that. This is the year that they work on blockchain settlement. And that's exactly what the XRP ledger and XRP is designed to do.
Generated from the unregulated exchanges. I've been in this space for also 10 years, and there were two business models when it comes to running an exchange. The first philosophy was to move fast, break things, and apologize later. Those Binance and FTX, and it's proven that it's a wrong strategy, and they're no longer here today. Right? And then there's a second path that we take things a bit slower. We manage to balance demand of different stakeholders. We comply from day one. And I think the whole world is shifting towards this second strategy, towards running a proper infrastructure in a compliant way. And it suits the next wave too. I would like to add further from Brad and Michael that the next wave would be probably driven by institutional money, which is like real serious money entering the space, not just retail customers. And as a prerequisite of those institutional funds, they cannot invest in something illegal or invest in infrastructure that are not well with good operations or security, not of the highest security standard. So
the next wave of adoption is coming from the institutional money, and it makes sense with Bitcoin ETFs, with everything that's aligned. We're going to see institutional players push the markets further. Ripple buying METACO is now a one-stop shop for institutions. Institutions can come to Ripple and have their entire crypto strategy covered by Ripple. Remember, 2024 is about settlement. The same time that MiCA regulations are coming out. METACO allows CBDCs, crypto, tokenized securities, bonds, real estate, everything.
Particularly like in the Middle East region, they're not super excited with the control that and surveillance that the United States and the EU has over their internal payments. Because there's really, these are sovereign nations. There's really no reason that there should be US and EU sort of surveillance and invasion into them. And they're kind of concerned about having more control over their own fate. And so that might be a driving factor for smaller countries in those kinds of regions.
In 2017, Ripple announced that they partnered with SAMA, the Saudi Arabian Monetary Authority. Later, it came out that the UAE was also working with Ripple. So Joel Katz knows exactly what's going on behind the scenes. And it turns out that the EU, as well as the United States, are spying internally on their citizens. Remember that money is confident. At the same time, this technology allows everyone to bypass the dollar completely. All the projects that are coming out of the biz are just bilateral swaps between two different local currencies. This means that there's no more dollars in between international trade.
Important to not just also listen to industry players, but also the regulators themselves need to know how to wire Bitcoin, public-private key. They need to actually experiment and try themselves too, and take courses. And my third point is that it's not one size fits all. Real use cases will probably happen more in Asia, where there are no financial legacy system. We can really leapfrog the West because there's no opportunity. The opportunity cost is not as much. And the demographic and the foundation are very different. For example, half of the people in the ASEAN countries have no bank account. We have issues and banks with underbanked. So these blockchain applications are more suitable for some geo location more than the others.
The United States has taken on this arrogant position that they can deal with digital assets later, that crypto assets aren't important, that nobody wants to use them, et cetera, et cetera. The problem is once the rest of the world starts using digital assets, they can leapfrog the US banking system completely. They could do this rather quickly, and once it happens, there's no putting the genie back in the bottle. This is going to happen at a rapid pace, and once it happens, it's too late.
With the introduction of proper regulations, which we're seeing across the globe, including European Union, I truly believe there will be a coexistence of digital assets with the protection of the end user. And we still will be able to treat blockchain also separately, not specifically for crypto, specifically for stable coins, but also for different purposes to ensure that actually there is the future of finance and we can apply not only blockchain but AI and make the services better. Because in the end of the day, all comes down to the end user experience and to the end user ability of being able to choose any type of assets or legal tenders they would like to pay with.
Crypto asset networks will lie on the background. Most people won't even know what they're using. This is all going to happen in the back end where exchanges are going to take place, bridging will take place, and the users themselves will have absolutely no clue what protocol they used. And this is going to happen with a vast amounts of protocols, with various different protocols, all happening in the background. When a transaction takes place, it just automatically looks for the path of least resistance and moves between one chain to the next chain.
But I mean, come on. Coinbase had more accounts than Charles Schwab, Robinhood, E-Trade, Interactive Brokers combined. Americans want to own Bitcoin, and an ETF is arguably the easiest way to do it. And with the fee wars that we saw, with people pricing down to 20 basis points, as Bitwise did, it's arguably the cheapest way to do it. So that's a huge unlock. That brings new people into the ecosystem. It encourages people to convert. And I'm with Eric. I think there's real sustained demand. I mean, we're just starting to get turned on at major platforms. We're just starting to have conversations with advisors. They're just doing the due diligence. But, we're doing 100 meetings with advisors a day at Bitwise. We're one of 10 firms. I think it's going to build over time. I actually think those volumes, they may level off for a while, but they're going to come back up. I think it's a massively successful one.
Coinbase is seeing more customers than Charles Schwab. Matt Hogan is meeting with hundreds of financial advisors per day. Markets are forward-looking. That means that they already smelled what was coming down the pike. And the reason why Bitcoin's at 41,900 is because they already knew these ETFs were going to pass. The next phase of this is the institutions actually allocating a percentage of their portfolio into these ETF.
And I think you're seeing more of that. And there are more leading companies emerging. I mean, Ripple's now at a place where we have focused on real utility of solving a cross-border settlement problem. We've invested heavily in the custodial area.
While institutions are leaning into the crypto space, Ripple has bought METACO, which is a custodial application. So they're setting up a whole suite of different use cases for institutional clients. They have every single aspect for institution. It's a one-stop shop for institutional clients.
Maybe close to $1 billion, the 500 of them together. And these guys are, these guys have done 6 billion of that. They're averaging more than the 500 combined, basically. So it's hard to do this in the first couple of days. And the other thing I'll mention, which I'm about to tweet out, and Matt is going to get a kick out of this. This is amazing to me. The volume usually on these big hyped up launches, it starts high and it comes down like 25% a day. And then you hope it settles into like 70 million a day or something like that. You'd be happy with that. It went up today. So today, all of them are trading more than they did the day before. That is really good sign. You never see that. That tells you there's legs here. It's not just like some hype thing that like fizzled away. So
usually hypey ETFs, what ends up happening is they launch, there's a lot of volume, and each day 25% is lowered and lowered and lowered until they reach their target range. But with these Bitcoin ETFs, the opposite is happening. There's actually more volume every single day.
Sort of a custody solution. Trying to find Ripple, trying to be like a sort of one-stop shop for institutional adoption of crypto, and trying to provide a platform that would provide access to the XRP ledger, to tokenization, to payments, particularly. Like there had to be a secure custody solution in there somewhere. And so we looked at many different companies, and then in May we acquired METACO. It was a huge acquisition, $250 million, Ripple's largest acquisition ever.
You notice how tense David Schwartz is around this acquisition. And that's for a very good reason, because this METACO acquisition was a strategic play. It was one of their largest amounts of money they've ever spent. Not to mention, METACO's clients are a lot of RippleNet clients, but they also have HSBC. Chris Larson is a board member on HSBC. He's the DLT board member for HSBC. HSBC has been diving into the crypto space for some time. In this HSBC document, it spells out that Ripple's XRP ledger provides real-time cross-border settlement using tokens that represent central bank currencies. In foreign exchange, HSBC's FX Everywhere tool processed more than 3 million intercompany FX transactions. Before we continue the show, I'd like to take a moment to ask everyone to like and subscribe.
I think there definitely are forces that would like to push pause. One of the things I discovered at Ripple when working with banks is that the big banks, who everybody thinks like the system is all set up to favor the big banks and they've got the whole system rigged and everything. That's true, but there's like 5 big banks. Sure. And then there's 2,000, like your local community bank feels the same way about big banks as you do. You know what I mean? Like, because they are like constrained to use, a financial system that's rigged in favor of the very, very largest. But if you're not one of those small handful, they're not super happy with the way the system is either. They would obviously prefer to be higher up in the sort of financial pecking order. And so that's something that you can kind of exploit. It's surprising who your allies will be.
There are 5 large banks that control the cross-border payment industry. Now think about this. If all of the smaller banks participated in a distributed ledger, in a trustless ledger, they would be able to overthrow the top 5 banks and get rid of all of the fees that they're currently paying the top 5 banks. This is why I believe AMMs, sidechains, decentralized identities are all coming to the XRP ledger. This will enable these banks to overthrow the top 5 banks and offer a better solution that's more secure, that's quicker, efficient, and transparent.
You know, the United States, for example, has a very good position with the dollar, where we enjoy a pretty significant boost to our economy from the fact that other countries are using the dollar. We can produce dollars very, very cheaply, you know, and if they value them at $1, that's a huge, you know, post World War II, that's been a massive boost to the U.S. economy. We would love for that to stay as long as it could possibly be, and so that's a force against anything that threatens dollarization. But also, to some extent, there's a recognition that that's not going to last forever. And then it's like, well, we would prefer the next thing not to be some other country's currency sort of taking the role. So there's sort of room in there to say, like, yeah, you would, even for the very biggest who would prefer that the world not changed, you would, if the world is going to change and it's going to, you'd prefer it not to change in ways that sort of benefit your biggest competitors. So there's leverage there.
There's a ton of smart people in Washington. Some belong to think tanks that know exactly where the trajectory of the dollar is headed. If the dollar is not the reserve currency, what's the best option for the United States? It's certainly not to have the Chinese yuan as the reserve currency or even the euro as the reserve currency. The best option is to have currencies that are completely neutral. That's what crypto assets are. They're currencies that are completely neutral by design. Some will argue over which is the most decentralized currency, while some argue what's the most efficient currency, what's the most secure currency. But at the end of the day, what I believe truly matters is the crypto asset sector by itself is going to overthrow international trade.
That made it much more real for them, and they needed some sort of they needed at least to be able to tell at a minimum, even if they thought nothing of it, they at minimum needed to be able to go to their board of directors and say, "Don't worry, we have a crypto strategy." Like, they at least needed that, and then they would come back to us and they would say, "So what is our crypto strategy? Like, what should it be?" And so they came to us, and they were much more receptive to at least thinking about how that would play out. And now, I mean, they're much more receptive to exploring it than they were.
Ripple used to have pitch decks that would get leaked on the internet, and we would often see how many customers are now working with Ripple. The last one that I've seen was 300 plus, and this was 2018, 2019. So I've heard Brad Garlinghouse saying that they assigned at least 1 or 2 clients per week. So 300 plus 1 or 2 clients per week from 2018. We're talking about a ton of banks. Now, those tons of banks are reaching out to Ripple, asking them what their crypto strategy should be. Now, Ripple owns METACO. They offer complete institutional access. They have everything built into RippleNet, and they're able to offer on-demand liquidity. They're able to offer things that other crypto companies just simply can't. So they've really seized the day, so to speak, with crypto. Now, there are a lot of great projects out there. The business model behind Ripple is not like any other business model that we currently are seeing in the crypto world. And that's why I've been an XRP bull for such a long time. Now, I often hear criticisms about XRP. However, I have seen too much for me to change my mind.
Reaction to an overhyped cycle of euphoria enthusiasm, which is just speculation. And I think what we haven't seen yet, that I still think we will eventually see, is a separation of wheat and chaff of, you know, what are the assets? How are these technologies being used to solve real problems that have real demand versus ones, you know, I'll pick on Dogecoin.
The last cycle was focused on hype and froth and lunacy. And what Brad Garlinghouse and other Ripple executives are telling you is there's going to be a utility bull run at one point, and I happen to agree. And there are certain assets, there are only a handful of assets that actually can be utilized to a point where It's making the financial system a better system. By dropping the cost of all transactions to its lowest possible fee, those fees are passed on to the consumers and businesses. That means consumers and businesses have money that they can reinvest, respend into the economy, making the economy a more prosperous economy. To be great, one does not have to be mad, but it definitely helps. Thanks everyone, I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon site or my Ghost site, dmjr.ghost.io.